Welcome back to this special chat with Larry Fink, the chief of BlackRock. Mr. Fink, the emerging markets now, both China and India have serious inflation problems. Do you think that the inflation problem is serious enough to derail growth rather sharply? We've managed something like 8.9% for a better part of 2010. Now, would you just say this is a moderation issue, or do you think that you would be really worried that inflation could derail growth for a bit more, take the country below 8% or something, more serious?
I think inflation is a serious issue in India, but I also think growth rates are actually higher than stated growth rates. And I think the opportunities in this economy, whether it is 4G, whether it is energy sufficiency, I see more dynamics that will be powering higher GDP in India. The problem with India, as we talked about, is inflation is high. It's high because of the food and food price inflation that we're seeing in many parts of the world, and that increase is going to affect consumer confidence. It's going to certainly affect consumer spending in other areas, and so it may become a drag. But do I see it a drag that's going to sufficiently unravel the future of India and challenge its growth rates? Not really. I think India is actually poised for faster growth, but it will be challenged by this inflation.
Okay. Well, the other place where prices have been rising rather sharply have been, say, crude, iron ore. I mean, basically commodity price inflation is something which appears to be threatening definitely Indian growth, definitely Chinese growth, even if not US growth. How do you look at commodity inflation this year? Do you see crude at $100, for instance, or copper going way above $10,000?
Well, I think copper and iron is a function of the growth of the global world. So that is purely a function that the world's getting stronger, not weaker. There's a demand for those commodities. Those are very those people don't want to have an inventory of those commodities sitting around in the ports. So those commodities are being used in the manufacturing. So that's just a sign of the very strong global economy. Petroleum prices, that's impacted by short-term moves. This is being impacted by the events in North Africa. It is more psychological. I believe at $100 oil, it opens up so many doors for alternative energy. It opens up the doors for much more natural gas. So I actually believe spikes of oil prices above 100 means long term that we're going to focus on alternative energy sources. So ultimately it's going to bring down the cost of oil. So to me, I believe there's a natural dynamics here. I believe oil is probably more appropriate at $80. But any short-term move is more of a function, not really of demand, it's a function of supply fears. And we have a supply fear right now, which I think will be proven to be unfounded.
You're the man who's, often believed to be in the thick of setting the U.S. government or helping the U.S. government set a lot of the financial problems right. Now, Europe is in a very different situation. It's gone into a lot of austerity. Its financial system is not really in ship shape just yet, whether it's government or it's banks, since the banks hold a lot of the government debt. What's your sense about Europe this year? Do you think that you're going to get those heart attacks yet again of a Spain here or a Portugal there, or do you think they've learned their lessons and now the stability fund is in place, and if anything they will be prepared to increase? I mean, will Europe be the problem it was in 2010 and 9?
Fortunately, I think so. I think it will be another problem in 2011. I don't see consistency from the regulators in Europe to fix the problems. You are correct in saying the banking system has not addressed their liquidity problems. The banking system in Europe is still possess 12% of their liabilities in commercial paper. So any little flare up, their funding cost goes up. So so, which also tells you that the banks are undercapitalized in Europe. And so I think we're going to need one more good old-fashioned crisis we're going to have that. I do believe the European community will come together and fix the crisis, but I think we're going to have a crisis before it all works out. So I'm very nervous about Europe. I'm more worried about Europe than I am inflation in the world. I believe Europeans needed to be more aggressive, and there's not a consensus in how to force that behavior change. Obviously Basel III has been announced, but that is a 2018 event, and so that's another reason why the Europeans have not been as aggressive as the UK and the US in terms of fixing their problems. That is why I like the US better than investing in Europe, because the persistency of Europe having these structural problems. And I'm not suggesting where that problem will pop up, but I know the ingredients in Europe is a very bad mixture that's going to probably lead to some form of crisis. It's going to lead to some type of problem that's going to probably shock the markets like last April and May, and it's going to require a great deal of consensus and group therapy to fix it. But I'm confident the regulators will fix it, but unfortunately they're going to have it fixed after a crisis.
Okay. Well, a couple of questions more remain in terms of the way regulation has evolved. You touched on it when you spoke about Europe. Do you think that the Dodd-Frank bill and some developments in Europe also on similar lines are enough to tackle the problem of derivatives? In the height of the problem, you had governments telling banks that they will have to do exchange-traded products, and customized products are a danger. But now as the crisis has ebbed and growth has returned, there perhaps will not be the same sincerity to look at all those problems and ensure that custom-made OTC products are regulated in the same fashion. So do you think both the regulators and the banks have learnt enough, or do you think those lessons will be forgotten and those derivative problems will come back maybe in 2-3 years?
Well, first of all, the Dodd-Frank bill was a 2,600-page outline, and they gave it to the Federal Reserve, the CFTC, and the SEC to say, you create rules. And you're correct in saying that the pressure is a little off regulators, the pressure's off the banks, but I still believe we're going to have a better structure, more regulated, a safer and sounder system. The CFTC has comments out right now on how to structure the derivative exchange markets. We are... Actually,
they're saying that they don't have the resources. That is their latest comment from the CFTC.
Yeah. Well, I'm not going to comment about that because I'm not intimately involved in it. But we at BlackRock are heavily involved in this, and we believe there are going to be policy changes. They're going to be significant. That's going to create much greater investor protection. More products are going to trade on derivative exchanges. So I'm not terribly worried about those problems. I'm actually more worried about problems that could come in the future. So what Dodd-Frank does, what Basel III does, it forces banks to have more capital. And the unintended consequences of more capital means, so a bank's going to charge you and I more money to use their balance sheet. I mean, if they have to have 9% capital, they have to charge more. But if you and I are strong enough, and if we get access to capital markets, we're going to go around the banks. So more business is going to transact on the capital markets. It's going to be in the form of bonds and equities, other types of products. So what we need to have our regulators start thinking about, as more of capitalism is transacted in the capital markets, not in the banking system, we need to make sure as we grow the interdependency of the capital markets, whether we do an IPO and we do the IPO in Shanghai or Singapore or New York or Mumbai or London, we need to make sure that we have a coordinated regulatory regime worldwide to protect these markets, because we're going to be more, not less, dependent on these markets. And so I know we haven't finished protecting ourselves from the banks and derivatives, I do believe there's enough momentum that we will do that, but at the same time, our regulators worldwide have to start preparing for the next problems, and the next problems could occur in the capital markets as more and more capital goes into it. We need to make sure we have a safe, sound, strong, fair market.
That's sage advice. Now, the final word I want from you. You're the biggest private equity manager in the world. If you want to buy something in India, what would you?
Well, I'm a huge believer on this society is going to transform itself through electronic media. Access of products, of services, of education, of healthcare is going to be done through electronic media. Until the infrastructure is fixed, it's going to be much easier to transact business electronically. So to me, to being involved in some form of commerce, through the internet, to be involved in the 4G creation, to me that's going to be the fascinating component, and that's going to change the whole delivery mechanism in India. It's actually going to elevate the rural areas as fast as the city areas, because the rural area is going to have just as great of access as the urban areas, and that's a transformational thing. And I think it's going to be really remarkable to have the ability to elevate the rural areas of India as fast as of large city centers, and it's going to change that dimension. So education can be brought to the rural areas just as much as the city centers. Health documents can be done, so you could transmit from your local doctor in the rural areas to maybe the top medical institution at a city, and so your health care can be improved. Obviously, you could buy whatever product you wish and dream through social media. You could communicate much better. So, it just brings the whole country to a better level. But most importantly, the one thing that I'm fascinated about electronic media, it creates a more fair society faster, and so it really changes the whole dimension. And so as India accepts this whole new technology, tens of millions of people are going to have greater access to more things, which means a safer, better India in the future.
Well, it's not surprising that the most powerful private equity manager is looking for the same thing in India as India's most richest corporate group. They also have put in a lot of money, Reliance, into 4G.
Yes, they do.
Mr. Fink, thank you very much for joining us today.
Thank
it was
you.
a pleasure speaking to you.
It's nice to be here. Thank you. Bye-bye.